So the other day I got one of those weekly routine emails saying, "Hey Akil, I started a trading account with $200 and now I am financially independent." And the first thing that came to mind was, but as I read a little bit further into the actual message, I realized that this situation was a little bit different than the scammy stuff that I usually get. If you decided to watch this video because you thought you were going to find out some quick, easy tip on how to turn a $200 account size into $1 million overnight, I'm sorry, but you're mistaken. The truth is, it is possible, and I'm going to share with you a story that a trader of mine shared with me today about how she started with a $200 account size and went on to become an independent, consistently profitable trader. However, it wasn't quick and it certainly wasn't easy. However, before we get into that, we're going to do something a little bit different this week. We're going to start off on the charts. I'm going to share with you some of the best trading opportunities that are on my radar for the week ahead. And then we're going to dig into the topic at hand and give you a few tips on how you can do the same. So we're going to get started here on the euro yen, and like many of the pairs this week in the market, we've seen a lot of consolidation. However, despite all the junk you can see in the market, the same overall directional bias still remains, and that is going to be a bullish bias. If you take a look at that pink line and we zoom out and look left, right? One of the things my mentor always taught me was look left, structure leaves clues. You'll see that this red line or pink line represents the most recent level of structure, right? Looking in the past. And we approached that level of structure back on the 12th, so earlier this week, and we had a higher high, higher close. As soon as we got that higher high, higher close, that allowed me to identify that a previous level of structure was broken, and it allowed me to make the prediction that price is likely to go higher. The next question is, if price is likely to go higher, then where are we likely to go? And if I just quickly delete some of the notes and stuff from the week on this chart, you'll see that our next VS1 zone, these colorful boxes, right, visual structure levels, excuse me, is up here around 132.46, and we can take that a little bit lower to 132 even. So regardless, right, we're trading at 129.50s right now. There is room to the upside. Now, to look at things at more of a micro level, we've retraced back into a pretty decent zone here, right? If you take a look at the battle that ensued right here around 129.50s by looking at the wicks of these candles, right? You see how price action pushed up, kept getting rejected, right? We look at that as selling pressure in the market, right? The buyers are trying to push it to or past a certain point. The sellers are saying no, and they're beating it back down. And they did that game for a little bit over a week, it looks like. However, they eventually lost the battle. The buyers pushed up. We had that higher high, higher close. And now we're coming right back into that same level, and I would expect another battle in the market. Now, as we go down to a lower time frame, the 4 hour, right, you're going to see a little bit of a clearer look at what has happened. Here is that breakout. Here's that first retracement. Here is another new structure high, higher high, higher close right there. That's a positive sign for buying. And recently we have retraced and we are now retesting previous structure lows. However, we have not broken and closed below it. We actually got a very good 3-bar reversal. If we just isolate these 3 bars over here, you're going to see a very high momentum bearish candle. We're going to see a bullish pin bar, and then we're going to see another bullish pin bar, right? The sellers tried to push it down, and they were rejected by the buyers this time. And we also got a higher high, higher close to essentially end the week. The last 4-hour candle is really kind of insignificant on a Friday. Regardless, this is a very positive sign, and I think it's an excellent place to look for a buying opportunity. So let's say you're going to buy at market. You can buy right here. Stops. You're safe if you go below the 129 even handle, depending on what your target is. You can probably go a little bit lower right there. And I think we can look for a retest of previous structure highs with a primary target and an extension up to that higher level of structure with a secondary target. So decent looking trading opportunity here on Euro Yen. Real quick, let me just bring on some of the indicators and see if that gives us any more clues. Good volume on that candle. If we look at the stochastics here, right, this is something that we've been playing around with in 2020 so far. What did we get? Well, we got the move from an overbought to an oversold condition, right? We got to move from above 80 to under 20 directly, right? No playing around in the middle. And it looks like we're about to hook right back above that 20 level, which would be another positive sign for a buy. So again, for you guys that are on the platform or aren't on the platform, this isn't any type of strategy, isn't something we're using yet, but we're always looking to continuously develop. We're always thinking of new ideas. And this is something that's been, we've been doing the eye test on this since the beginning of the year. Now, next up is the Euro Canada. I can't recall if we looked at this in one of the YouTube videos or if it was just, I know we looked at it on a daily basis for like the past 2 weeks in the live room, but if we didn't, here's a little bit of a recap, right? Essentially, what we did was we came into a previous level of structure support, a pretty significant one, right? This consolidative area right here. Once we broke and closed below it, right, that allowed us to identify a lower low, lower close. We predicted a continuation lower. One of the ways that we thought price can get lower was a pullback trade. Boom, perfect example of previous structure support turning into resistance, and then boom, we rallied down since there. Now, the move has already been done, or at least I guess the market can do whatever it wants. But we have reached a location in which I thought we would reach here on the Euro Canada. And what I'm looking for this week is a little bit of relief, a little bit of a reversal. And if we pop down to the 4-hour chart, we've got a nice little head and shoulders pattern setting up, right? You can see price action has put in an extension down. We put in a very shallow retracement, but then we follow that up with a very shallow extension, which is a negative sign for a continuating trend. Continuation? I don't know. Continuating. I don't know. I make up words here. It's a negative sign for going bearish, right? We then have a retracement back up to our previous level of structure resistance right here. Another failed move lower, and then you can see we test this level a few different times. We've kind of been hanging out there. Now, I'm not saying to buy this up right away. This in itself isn't a sign that the market is more likely to go up versus down, but if we can violate these highs, then it is, right? And if we do, I think we can come back up to retest again this previous level of structure support, turn resistance. And if you're a little bit more ambitious, you can probably even look for a test of the highs here. So looking for a move up to about really 150 as a conservative level, right? $1.50 as a conservative level, and maybe about 150.50s, 150.70s as a more aggressive one. But again, you want to wait for confirmation. Remember, I haven't said this in a while in the video, but we want to be predictive in our analysis, meaning we want to run through the scenarios in our head, if this, then that, if this, then that. But we want to be reactive in our execution. So we want to wait for the market to give us a sign before we ever do anything. And that sign should be a sign that says the market is more likely to go in our favor versus against us. Also, one more thing for the live rumors that have been following us, right? If you take a look at our RSI here, right? We've broken that 60 level, right? Remember we talked about the zones, right? From 60 and lower bearish, from 40 and up. And again, really 66 or 33 if you want to be kind of precise about it. But we've broken that level to the upside, right? So that's going to be another sign in our favor for a potential bullish move here, or at least the end of a bearish trend. So lastly, we're going to look at the NAS 100, the NASDAQ, and this is going to be a little bit of a different situation, right? You guys know about the IPDE process we have: identify, predict, decide, execute. From a technical perspective, or I guess from a trader's perspective, everything every part of that process needs to be on the chart. Identify what price is doing, predict what price is likely to do next, decide if, when, how I can get involved, and then enter the trade. From an investor's perspective, and this is how I personally handle stocks and indices and some other asset classes, I look at it from a longer term valuation perspective, meaning my identify and predict needs to be on the fundamental side. Do I value this asset? Then to decide and execute, that's the technical part. So instead of doing everything on the charts, I want to determine my bias based on the fundies, and then I want to go to the chart to look for the precise locations to get involved. And I say that because if you're a tier 1 member and you're looking at your chart, if you're anyone that ever did any training with us, you're looking at this and you're saying, Akil, wait a minute, bearish rotation. This is not a buy signal at all. But what I want you to pay attention to is this: if we have that bullish bias from our fundamental reasons here, if we take a look at this this box right here, this is a pretty decent level of structure to get involved at. We look at price pass behavior, right? Past price behavior, and look what we've done, right? We've come down, support, come down, support's held twice. We finally came through, we got past it. Just like in the Euro Canada, support turned to resistance, we come down, support turns to resistance, we come down, resistance holds, right? We break past it again, support, blah, 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 support, right? You can see the pattern here, right? This zone has been a pretty important zone in the past as both support and resistance. And guess where we're trading at now? Right back at that zone. We have some beautiful candlesticks, right? We have a nice bearish move down here. And then we get two indecision candles, right? We get the market just kind of stalling and thinking about it. Indecision, even though this is a red candle, I look at this as being a bullish candle. We then get a higher high, higher close with a bar that has a very low wick as well, which means the sellers tried to push into that zone and boom, they got rejected. We then did that again 2 candles later, right? Price action, or the sellers, tried to push all the way down into this zone. They tried to fight it once again, and boom, they got rejected, and then we ended up closing on the highs, right? So this is not a bad situation at all if you're looking for a buy, because you know where your stops need to be, right? Let's say you got involved at market, you know your stops need to be below this zone, right? If you're below this zone, then, or if price goes below this zone, you're most likely wrong. And again, from a technical perspective, a first target can easily be at a retest of previous structure highs. And again, if you're doing some type of buy and hold action, we've got a lot of room higher to our previous all-time highs. And then, of course, holding past that as well. Just to go one more time frame down to an hourly, you can look at this as being a double bottom. We haven't broken it yet, but if you're looking for an entry reason, right, aside from the aggressive one, you can look for a break and close above the peak of our double bottom, and then get yourself involved in some 2618 action right here as well and have even tighter stops. So again, overall picture, we're not really getting a bullish technical signal here. But if you do have a bullish bias and you're looking for a place to get involved, if you like the price point, this is a very good technical level on the daily and more specifically the 4-hour to start accumulating a position once again. So I want to take a minute or so to read through this email, and I know it may seem boring to many of you guys, but for you guys that are serious about becoming independent, consistently profitable traders, this is going to be important, because understand, this is someone who has just done what you are looking to do, and those are the people that you want to kind of flock towards and learn from. And she says, "Dear Akil and Jason, I'm not sure if you remember, of course we do, but I was a member of Tier 1 Trading in November of 2018. I had an accountability session during that time, and today I came across my notes and goals from that session. Goals: December 2018, fall into a sustainable daily schedule and decide how and when Forex fits into that." And that's something that's very important. I just talked about this in a podcast I put out this past week called, I think it's called New Trader, What's Your Plan?, where Jason Greystone interviews a newer trader and he starts asking him, hey, what's the bigger picture plan? Because you need to know that. That way you can fit up your trading or fit your trading around your lifestyle instead of vice versa. She said, January 2019, put together a back-tested started portfolio that I'm happy with in the short term and get a better handle on what my trading personality is. And then by trading personality, she lists underneath that risk tolerance, risk reward threshold, what type of trading I want to gravitate towards, what am I strong at, what CTS pieces are most important to me. CTS is combined technical score, so different technical elements. It could be anything from support resistance to Fibonacci to pivot points to psychological numbers, double tops, double bottoms, stuff like that. Figure out what I like, what I don't like, and how to put that together. Then she says January 2020, so a whole year doing that stuff, right? Just dedicated to learning. January 2020, be a consistently profitable trader, put together a kick-ass back-tested portfolio. And then 2021, become financially independent. So she's given herself a year to learn how to trade, a year to kind of get over those new trader wiggles, and then after that, becoming financially independent. Now, she goes on to say, I remember people questioning whether these goals were too ambitious and perhaps I should be more realistic, right? Some of you guys are probably like, too ambitious. This is too long, right? I'm supposed to learn how to trade in a day. I just want to let you both know that I have met all of these goals earlier than I wrote above, but fairly close in general. The journey was different than I expected, and I trade futures now, but it was all worth it. And that's important as well, not to do a shameless plug, but we get labeled a lot as Forex traders because that's the market that Jason and myself mainly concentrate on. But what we teach is the skill of technical analysis, the skill of strategy development, the general skill of how to read a price chart, how to develop a strategy, and how to become an independent, consistently profitable trader. And those skills can overlap into any market. Anyway, it was all worth it. Staying up till 3 a.m. listening to Jason's live room, 14 hours in front of the computer back testing. I doubt the worry. It was all worth it. I went from scrapping together $200 for my trading account and spending almost everything else I had on a month for tier 1 trading to having more than enough to sustain my life, be independent, and do so for this foreseeable future. Man, I can also give to others, and it brings me so much joy. So thank you. I was so fortunate to join your community before I had the chance to develop any bad habits. Otherwise, the foundation, and that foundation still sticks with me to this day. It's the undercurrent to all of the trading I do, and frankly, changed the relationship I have with the world. So I hope you were inspired by that email, and there were 2 takeaways that I took from it. The first one is process-based goals. I just had a conversation on Instagram with some traders who were asking me about what are my daily, weekly, monthly PIP goals, and I said I don't have any. I have process-based goals, and I trust that if I follow the process, I will get the outcome that I deserve. And if you look at how this trader set up her goals, it was the same way. She had the long-term goal of becoming an independent trader by January 2021, and she worked back from there. So she asked herself the question, what steps do I need to take in order to achieve this goal? She listed them out, and then she went whoop, 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 one by one, achieving them. That's very important. Another important step to this component is doing the work behind the work. And I'll try not to get on too much of a rant about this. I've talked about it a lot here in the trading videos and of course on my podcast. But if you know that your end goal is 3 years away, right? Let's say, again, you want to be an independent, consistently profitable trader. You want trading to be your main source of income. At some point, you need to do the calculations on what is your number. What number do you need to live off your trading? Once you know that number, then you can determine your account size, right? You take your profitability and you can determine your account size, and you know exactly what number you need to reach to in order to make that a reality. Now, once you have that number of what you need to reach, now you can go back and start asking yourself, okay, I've got 3 years to achieve this goal. In those 3 years, how can I be in a position to fund my trading account with, if not all of that amount, close enough to it so that I just have to put in a little bit more trading work, build it up a little bit more in order to get to that level where I can trade full time. So it starts with getting your personal finances under control, or at least having a plan to do so. And then while you're working on the education side of trading, where you're going through the courses or going through the learning process, you're developing strategies, you're back testing, you're demo trading, you're live trading, you're going through that weird stage where everything's weird because trading psychology now plays a role. While you're doing that on the trading side, on the other side, you should also be working on personal finance aspects, meaning how can I reduce debt? How can I reduce my spending? How can I put myself in a position where each month I'm saving as much as I can? That way I can roll that money over into the pot that will eventually go into my trading account. That way, when my skill level on the chart is where it needs to be at, boom, I'll be ready to go and I can get right to that level of becoming an independent, consistently profitable trader.